Hey everyone, we have Anubhav with us. Anubhav was the founder of Tactic, now acquired by Kata. So Anubhav is a good friend, and Tactic was a tool which is designed for fund construction, fund modeling for VCs. A lot of VC fund used to use this tool, like more than 250 plus VC funds use this. Uh, all the top funds in the US use them. So Anubhav is gonna talk about a lot of things which people do in fund construction and modeling, especially how a tool is very different, right? Like people do been doing this in Excel as it was working, but in a more data-driven approach. So Anubhav is gonna tell us. Over to you, Anubhav. Why don't you give us a very quick intro about yourself for a minute, and then maybe we can start with a quick demo followed by a Q&A.
Yeah, let's dive in. Hello, everyone. I'm Anubhav. I'm the founder of Tactic. I started the company about 4 years ago. I myself came from a VC background. I worked as an investment banker for 10 years. So all of that to say, I probably spent a lot of time in spreadsheets and financial modeling, more time than is healthy for me. And the idea for Tactic came about as I was working as a VC when my GPs would ask me questions that were forward looking. Don't just tell me what my DPI or TVPI is today, but what could it look like 12 months from now if we take these following decisions? Or how much should we reserve for company A versus company B? Uh, how do we think about reserves for an aerospace company versus an e-commerce company? So these were questions that were posed to me, and this was always done in very ad hoc, messy spreadsheets. There was no real structure around it. And then when I looked around the existing venture capital tools that are out there, not a single one of them helps you forecast or is forward looking. Everything is backward looking. So that's what we set out to build. The first backward and forward looking portfolio management tool that is not meant to just measure what you've done, but is also meant to help you make better capital decisions going forward. So this is what Tactic is. We were just acquired about 2 weeks ago by Carta. And so now we're part of the Carta fold, which means if you ever become a Carta, come into the Carta fold as well, you can enjoy integrations with the Carta system. We'll talk more about that. But for the moment, I'll try to give you a sort of a quick demo of what the system actually looks like. And then it's less of a demo, but more about why we do the things that we do. So let's dive in. I'm going to actually share with you an example fund so you can actually see that in action. Just give me 1 second. Okay. So in Tactic, firstly, your fund is presented to you in the form of a visual dashboard. So we will summarize your capital metrics, your reserve metrics, number of companies, your returns. And because it's a living, breathing model, we're tracking your actual performance, but then we're also projecting the future on a lot of these key metrics. So again, this is one of those things where traditionally in venture capital, forecasting has not really been done. FP&A as a function exists in pretty much every sector in the world, but when it comes to venture capital, for some reason FP&A has never been done. And part of the reason is it's very difficult to do because you are forecasting cash flows at the company level and seeing what that looks like on the fund level, doing a budget versus actual analysis, things like that. They're somewhat difficult to do in a probabilistic world of venture capital. So with Tactic, you will be able to do that. And the framework here is to first build your budget. And we call this the construction forecast. The construction forecast is your original plan that you set out to achieve for your fund. You can even use this, of course, for your fundraising. So if you're raising a fund, as you know, you have to usually share with LPs a portfolio construction plan that shows all the various strategy on how you expect to deploy your capital. So you can use Tactic to actually build a construction forecast. The construction forecast is built by asking you a few questions. So we will ask you things like, basically, when you first log into the system, we will take you through. Oops, 1 second. Yeah, when you first log into the system, we will take you through an onboarding wizard where we ask you some questions on your fund strategy, your fund structure, to help you build that construction model. The questions we ask you here are around your fund strategy. So, for example, we might ask you, your expectations on what round sizes and valuations might look like for the rounds in the sector that you're investing into. And we will give you data here. Our default data actually comes from Carta, comes from Crunchbase. So you're welcome to use real world data sets. So you can actually build a model that is based on actual real world data as opposed to just sort of simplistic assumptions that 3x 5x half my portfolio, things like that. Secondly, we ask you for probabilistic assumptions. So what do you believe graduation rates or exit rates might look like for the rounds that you're investing into? And again, this is probabilities of a company advancing to the next round or being sold at a particular round. So you can come into the system, you can set up your macro thesis here. And then in other sections, we will ask you for your individual fund strategy. So we call these allocations. So this is where we'll ask you, what are the type of deals that you expect to be doing? And for each of these allocations, you get to decide what your check size strategy is. So, for example, for my seed investments, I am saying here I would like to invest 30% of my fund into seed companies. On average, I'd like to invest 1.5 million in the initial round. And my follow on strategy in this case is to try and maintain a 10% ownership until the Series B. So, Tactic will use all of that into consideration to calculate your average entry ownership. How many seed investments can you make? What your follow on checks look like? How many follow on deals can you do? The general idea is you can build out different tracks of investments that you expect to do, and we will calculate the number of companies that can fit into each of these tracks. You can of course set up your fund's management fee structures. You can set up the waterfall for your fund, so hurdle rates, catch ups, carry percentages. And once you go through this wizard, the system will build for you a construction plan. Now, in terms of showing an LP what they're looking at, you can simply publish this as well. You can send this link to an LP if you want, and so an LP can actually take a look at this construction plan that you've laid out. And we will summarize here your investable capital, how we expect you to use this capital, pacing analysis, what we believe your capital call schedules might look like, along with the projections of your fund multiples. So the net DPI, TVPI, RVPIs, your gross and net fund IRRs, what your fund valuation or the NAV might look like over time. Things like the J curve analysis. So, what is the expected payback period for your LPs? We'll also estimate what the power law curve for your portfolio will look like. And this is a function of the graduation rates, exit rates. And then we will project the LP cash flows and the GP cash flows. So, pretty simple. Takes about 10 minutes really to build a construction plan for your fund. But the real power of the platform is that you can now update this plan with your real companies. So there's a section called investments where you can start to add your actual portfolio data. Now you can add a company to the system either from the UI or you can of course use our Carta integration. But for each company, you can firstly track a lot of just information. So sectors, geographies, maybe some custom tags. And you can also start to manage the journey of these investments. So these could be financing rounds in the past. They could also be financing rounds in the future that you want to plan your forecasted reserves or your dilutions for. Any round, you can specify how much did you invest at what terms. Tactical calculate your fair market value, your ownership, but it'll also forecast for you what that dilution might look like all the way down to an exit. Any future rounds, you can reserve your pro rata into the system directly. And this is where we start to give you the first level of what I would say is reserve guidance. So, what is an optimal reserve level for this company in this round? The way we do this is we help you think through at different reserve levels, how might your economics change? For example, as your reserves increase, some metrics move in the right direction, but let's say your TVPI, that might go down, of course. And so we're trying to show you what that tipping point or inflection point might make sense for this company in this particular round. You can also build multiple scenarios for your investment. So Bessemer in the US is known for this. I think they have published memos around this. Although this is a very common venture capital framework where you can build different scenarios and assign probabilities to them. So upside cases, downside cases, failure scenarios. And each of these scenarios can have a completely different reserve strategy, a different exit outcome. You can then put a probability on the scenarios. And in this case, Tactical will automatically build a risk weighted analysis on the expected returns, expected reserves on a risk weighted basis across all the scenarios. Now, everything I'm showing you here, you can actually do this for a future investment as well. So it doesn't have to be an active company. Maybe you're in diligence on a company, you want to model out different scenarios, see the impact on your funds model. You can certainly do that, and then you can download specific outputs for your investment memo. So once you start to add your portfolio data, the system comes to life. We will show you for each company, how much have you invested, how much have you reserved, valuations, ownerships, multiples, pretty much 200 different fields. They could be backward looking, they could be forward looking, that one could select to customize this for a report. But now we will tie this together back with the construction plan. So now the original construction plan is updated to become the current plan, which means we will take into account the actual companies you've loaded in the system. We will summarize how well have you deployed your capital, but then we'll also start to answer the question, are you following your plan? So let's say on pacing, what was my original forecast? What is actual to date? What does the current forecast look like? In fact, this type of variance analysis, budget versus actual, pretty much happens now everywhere. So my DPI or TVPI, again, what is your actuals? And then how has it been compared to your original and current forecast? This is also where we start to give a lot of insights on how your portfolio has performed. So things like what's my geographic performance? What is my sector performance? Perhaps show me by co-investor, who have I invested the most with so far? Or perhaps show me the average, say, multiple by sector. So what is my average multiple by the different industries I'm invested in? So a lot of different ways one could pivot based on the different dimensions of performance. So why is it important to do forecasting? The next chart here will actually sort of illustrate that. The the nice thing about having done all this work of forecasting individual companies, scenarios at the fund level, is you can now start to see if you are being consistent in how you have deployed your reserves or you're planning on deploying your reserves. So we call this the optimal reserves rank. Basically, we are showing you here, we're ranking here all of your companies based on the expected return on the next $1 of investment that you have reserved for that company. This is a follow-on multiple. It's saying that, okay, for Alpha Tech, for every $1 I'm investing in it, I'm right now in my based on my model, I'm planning on getting $3 back. But for Echelon Fitness, it's only 1.9. This is a framework. It is not meant to be prescriptive. We're not saying you should reserve more for Alpha Tech versus Echelon Fitness. Uh, we're not quite saying that, but we are saying that the way you have reserved, it may not be consistent the way you have modeled these companies. So it's an opportunity for you to either think about whether the scenarios you've built out for the companies are consistent with how you've reserved it, or if you want to change your reserves. The other thing about portfolio management is collection of data coming from your companies: revenues, burn rates, cash balances. Now, a lot of funds out there collect a lot of the data, but not a lot of funds know what to do with the data. It's usually just shown in a report. There's not a lot of computation that could be done on it. So in Tactic, again, not to be a full demo here, but in Tactic, you can certainly collect data. You can request data from your companies. You can request projections, actuals, all of that. But I would say where Tactic here would really shine is the fact that you can actually analyze that data quite significantly. So there's, of course, like a dashboard where we will show you all the different metrics that you've been collecting. But a couple of interesting analysis that we see our clients do and that we've crystallized in the software is what's called a fund as a company analysis. This is going to answer the question: if the fund were a single company, what would its average revenue be? What would its average cash balance be? So it's basically distilling down your entire portfolio into one company to try and see what does that one company look like, and would I invest in that company if this is what it was presented to me as a fund. It's a great way to gut check the health of your entire portfolio. So in Tactic, we will do this automatically based on the weighted ownerships that you have into each company. Along similar lines, there's also what's called a valuation analysis. So you can ask Tactic to calculate a valuation multiple on, let's say, all the revenue that you've collected so far. So then we can show you for each company what the revenue trend line looks like, because we know the revenue that is coming back from the company and we know what their financing history has been. So we put the two together to see what the revenue profile looks like for each company. And then we also show you for your overall portfolio what your revenue multiple looks like. So a lot of interesting ways where you can compute on the KPIs, including creating your own formulas. So formulas is where you can actually create your own, let's say custom formulas that you want to calculate custom metrics from. let's say I've collected revenue for my companies, but I want to compute the 12-month growth rate on the revenue. So you can create your own custom formula, and then we will show you what the average 12-month growth rate, the results of those calculations look like, and this becomes its own KPI that you can include into your reporting. So all of this eventually dovetails into reporting. There's reporting at the company level, there is reporting at the fund level, but at the company level, we automatically put it all down into a tear sheet. Uh, so these are one-page profile summaries for each company, where we will summarize the key statistics, description, commentary, historical rounds, exit scenarios, maybe some of the key KPIs, and all of this is customizable. So you can change the color scheme, you can make it look and feel like your own funds. So that is tactic. And this, if we pause and just look at the whole thing, it starts off really simple with construction planning, and you can use that to raise a fund. But over time, you update this construction plan with your actual companies, and the system then starts to show you how you're doing compared to the plan. And you can start to use all of these other use cases that come out of it, whether it's reserve optimization, whether it's KPI planning, and in general, just stay on track on where your fund is going. And it gives an opportunity for you to course correct if the market is different than what you thought it was. So we do what's called like a construction versus actual comparison, where we will show you, let's say, valuations. What did you believe valuations were going to be in the market? What have they actually been? Where have you been wrong? So now that your valuations in the market are different, do you want to change your check size strategy? Again, it's just an opportunity for you to rethink what your strategy of the fund on reserves, construction look like by looking at actual data that is coming in. And by having a forecast that is always evolving, you get the opportunity to be able to do that. Everything that we've built in Tactic, we have not done this in isolation. This has all been done based on actual real world funds that we've worked with. So this is crystallized based on actual workflows that we see some of the best funds in the world use. This is difficult to do in spreadsheets, I will say, because usually all of this work I've shown you here will require an entire team of analysts to be able to compute on. So we've put all that into a software. So the point is that if you're whether you're an emerging manager or an established manager, you can do all of this on day one without having to build this from the ground up. So with that, Pavitran, I would love to give it back to you to see if any questions or anything you want me to dive into.
And about what we can do is maybe a couple of things I would also want to see is, in the fund construction, you have the crunching the numbers from Crunchbase and other places, right? Just to put the benchmarks. Can you talk about that, or can you showcase this? So I've been a very active user of Tatic. When I was working with my previous firm, like we used to do a lot of fund construction, right? Like one common thing which we were problem we had in our new fund construction is, you know it's when we do in Excel, it's very, one dimension, right? It's not multi-dimension. But when we do in Tatic, we're gonna say in a different kind of valuation, different graduation rate, different exit scenarios for an investment in SaaS versus in a deep tech versus in a consumer, right? Because the valuation for a consumer is not much, like the multiple is not same like your SaaS, what I'm gonna give, right? So based on that, my pro rata, what I'm gonna do is gonna be very different, right? Even my exit's gonna be very different. And
Yeah.
for SaaS, it's gonna be sometime very, very higher. For deep tech, gestation period is very higher. What I really loved is, you also give market benchmark numbers from last 1 year. You can put a region and bounces. So can you just show a demo of that here?
Yeah. So when you're building the construction plan for the fund, and you're defining, the sector profile, which is the macro view, uh, where we ask you for round sizes, valuations, graduation rates, exit rates, there is a module at the bottom called Market Intel, which plugs directly into the Crunchbase database. So if you want to, you can say here, show me all the deals in let's say artificial intelligence over the last 3 years. You can even search for a specific sector if you want, or you can say, show me all the AI deals in, let's say, Europe. So again, we will run that query to show you what European AI, let's say, looks like in terms of round sizes, what their percentiles are, valuations, what the percentiles are, maybe some recent transactions in the space. And you can use this live market data to build a more custom profile for your specific fund. And to Pavitran's point, um, the a very common mistake that folks used to make in Excel when they're building a construction plan is overestimating the reserves. So you may have heard this commonly that as a GP say, "Look, I want a 1-to-1 reserve ratio. For every $1 I invest, I want to reserve $1." That may not work out because a 1-to-1 reserve ratio means almost 100% graduation rate. Almost all of your companies have to graduate to the next round, so you can invest that next $1, and that is when your reserve ratio will be 50%. That doesn't always happen. If you're a pre-seed or a seed investor, your graduation rates might be 50%, and so it might be quite difficult to actually get to that reserve number because you just don't have enough companies graduating to the next level. Now, of course, you can play around with it. You could say, well, if only a third of the companies make it to the A round, maybe I can upsize my investment in the A round. But then it's no longer a 1-to-1. Now it might be 1-to-2. And so these are just things to think about. And by having you think in terms of graduation rates, we ask you to consider more foundational assumptions instead of just thinking, let's just put 40% of my fund. That usually ends up either under reserving or maybe sometimes over reserving. But in this case, by asking you to think about graduation rates, you're building a much more defensible model, something that's a lot more flexible, and you can always change and track what your actual graduation rates have been in the event that you need to change your reserve strategy.
And about one more thing, right? Like, when we do this construction, what we also realized is we were a little bit looking onto the pacing also, right? We look into our benchmark numbers. How many investment have we done? Okay, in our fund, right? Let's say we are moving to the next fund. It's gonna be doubling. Like how many resources we have, how the pacing should be, right? Because when you do the construction, the size is increasing. You are thinking, okay, hey, I can make these investments, but sometimes to get to these numbers, it was very mechanical. There was not a factual way. Can you talk on the pacing? Like, I mean, pacing in the sense, how do you come up with the number? Because you are defining a certain, for seed investment of my fund, I'm gonna reserve 20%. For
Right,
my series A, I'm gonna reserve 30% of my allocation. Yeah.
right. Yeah. So pacing and the timing of things, this is again all defined by the sector. And so good point here, Pavitran. So what we actually ask you for what your initial investment horizon is. And usually for most funds, this is 3-4 years. So about 36 to 48 months. This is the time over which I expect to invest my initial checks. What about my reserve checks? So reserve checks you may not have control on because the reserve checks depend on what the graduation terms look like. And so again, you can actually set up those assumptions. And we are seeing, I would say, elongation of graduation terms in the market. This used to be 18 months on average for a company to move from let's say a pre-seed to a seed or a seed to a. Now that is closer to 20, sometimes even 21 months. And so this has an impact on when do you expect to be able to deploy those follow-on reserves. The longer this is, then your initial horizon may finish in 3 years, but your follow-on horizon might continue on for 4 or 5 years. And so that of course has an impact on your pacing. And we will of course summarize this for you. So we will show you what the pacing looks like for your initial checks within that period, and then of course follow on when the follow-ons are supposed to begin. This brings up another point, which is uh, recycling. So I'm not sure if in India how common this is, but in the US, recycling is a very common provision, where you are basically able to reinvest some of the exits that you're collecting back into new investments instead of distributing it back to the LPs. This has to be, of course, negotiated with the LPs. If you are able to do this, it's a great way to reduce leakage on your fund into fees and expenses, and actually try and invest as much capital as possible. But of course, this does require you to be aligned with the LPs. But if you are doing this, then the amount that you can recycle depends again on your pacing. So what is the timing of your exits? And for an early stage fund, uh, if you're a pre-seed or a seed investor, your exits may not occur for about 6-7 years into your fund's life, maybe 7 to 8 years. And so you're now waiting for those exits to come before you can ever even have the chance of reinvesting, because by the time those exits come, you are well beyond your investment horizon. Of course, if you're a seed and A investor and you collect a few early exits, it's nice to have that provision. that if you get an early exit, you can certainly reinvest it. But if you are looking to do recycling, we can talk more about it. Most GPs in the US who do this end up overestimating the impact of recycling, because sometimes they forget the time it takes, or they might miss the time it takes to collect the first exit.
Thanks, Anubhav. This was helpful. Probably we'll open it for Q&A. So, folks, if you have any questions, please post in the chat window or in the Q&A section where we can bring those questions onto the stage, where Anubhav can take that question. Anubhav, in the meantime, why don't you show also on the portfolio side, right? Like we have uh, the portfolio function where we can build custom tier sheets and stuff.
Yeah, so we can talk about a KPI manager, which dovetails into the portfolio management functions. So on the KPI side, in Tactic, you can of course enter the KPIs that you want. You can customize what are the KPIs you're looking to collect, but you can also request them directly from your companies, and that is called a KPI request, where we will automatically send an online questionnaire to the portfolio contact. Now, the portfolio company themselves never really have to log into any system. They will just get a simple email that says this fund is requesting this information. They can enter that data, put in comments, and once they click submit, you will just see the status move to completed for that KPI request. And you will see that your KPI dashboard has been updated with that. So all of this eventually goes into reporting. On the reporting, if you have been collecting KPIs as well, you can customize your reports to include those KPIs, what those KPIs are that you want to include, as of which date, and all of that will then be shown into your reporting. There's other reports as well. There's a company KPI timeline that'll show all the different statistics you have collected across all of your companies. There is like a portfolio summary report that will show all the different companies and any statistics that you might want to customize. So whether it's financing or fundraising metrics, or it's the KPIs themselves. So again, once you have the data in the system, then it can be exported into a lot of different ways. And just as a general rule, any chart that you see in Tactic can always be downloaded into a PDF, image, or Excel. So if you're looking to build your own LP reports, you can always enrich them with the visuals and charts that you see from Tactic.
Anubhav, on that line, there is one more question. I'm gonna bring it on stage. How do integrations and reporting work across, say, email and Slack? Would love to learn more about it.
Yeah, so we actually are on the Zapier ecosystem, which means you can integrate us with pretty much any platform, whether it's Airtable, Google, Slack. You can set up triggers. Let's say something happens on Slack, you want to automatically create a new portfolio company, so you can set up a Zapier trigger to do that. Um, but of course, as part of the Carta ecosystem, there's going to be a lot of information that we're going to be pulling in from cap tables, from your general ledger, from your fund administration platform. But outside of Carta, Zapier is where you can connect us with other third-party apps.
Okay, any other question, guys? Can post. So, Anubhav, can you also talk on the tier sheets, right? Like how we can, have the quick export about the portfolio, which we can share generally.
Yeah. So the tear sheets are meant to be, one-page profile summaries for each company. So we will summarize the key statistics, sectors, how much have you invested, how much have you reserved, company description, which of course comes from you. Commentary comes from you, and you can customize all this. We will automatically put in the historical rounds, maybe some of the exit scenarios you put in. And again, all of this can be customized. So you can change the color scheme, you can rearrange things if you want, you can add your own free text on here. And the nice thing is you can always download for your entire portfolio in a single click. So you don't have to do this one at a time. You have 50 companies, you can just download one report of all 50 pages for each company. This is probably the most commonly used reporting tactic.
Okay, I think there is one more question. Would be great
Yeah.
to hear some case studies or success stories around some of the most used features.
Yeah, so I'll tell you that the most commonly used one of the most commonly used feature is actually one I haven't even talked about. So this is called the scenario builder. So let's say you've done company level scenarios, upside cases, downside cases, and now you want to build a fund level scenario. What's my fund upside case? What's my fund downside case? So the scenario builder is a playground for you to run different simulations of your fund. So we will show you here your current model, where that is tracking towards in terms of reserves, in terms of your multiples, all of that. But now you can run a new scenario, and you can say at the bottom, you can see all of your individual company scenarios, and you can just toggle them on or off. So what if Alpha Tech does go IPO? Activate that scenario. What if Amplio fails? So activate the downside for that. What if Catalyst Lab also fails? Activate the downside for that. Recalculate or simulate for me what this would look like at the fund level if this situation were to occur. So we will run that scenario, show you the expected returns because of that, and then we'll compare that with your current fund. And you can save these as new scenarios. So this becomes quite powerful because you can now use the work you've done at the company level to come up with scenarios at the fund level. What would happen if this occurs or that occurs? So very commonly used feature, probably one that some are more quantitative heavy investors love to use. And then along the similar lines, another one is called the minimum partial sale valuation. So this is basically helping you think about what is the valuation to sell a company in the secondary market. Uh, if you're selling a company in the secondary market, you it's an IRR analysis. What is a minimum valuation? So my fund's IRR is no longer changed because I'm collecting some cash up front, even though it might be lower than I expected, but I'm collecting it up front. So I'm getting some IRR uplift. Um, but I'm also, of course, losing some TVPI along the way. So what is a minimum valuation? That would be accretive to my fund's IRR. So we calculate this automatically. For each company, we will show you what is a minimum valuation that you could sell the company today for there to be no impact on your overall fund's IRR, and then we will compare that with where the current valuation of the company is. So if something is already at a discount, then that means you're already in the money. Alpha Tech, you could probably sell this today for its last valuation, and you can actually create some capital and some accretion on your funds IRA. Are you planning to add many more market intelligence sources other than Crunchbase? Carta is the only one. We are looking to plug directly into the geographic market data on round sizes, valuations from Carta. If you've tracked the work of Peter Walker at Carta, he publishes some amazing reports on trend lines and graduation rates, and so that's what we'll be looking to pipe that in a more integrated way into Carta, into Tactic.
Okay, any other questions? Final questions for Anubhav?
If you want to, anybody here wants to try Tactic, really simple. Just go to tactic.io, click on Get Started. It's a free 30-day trial. You can build your model, add investments. Highly encourage you to do that. It's a great way to kind of test drive the platform and then build some portfolio construction plans.
I think that's all, Anubhav. I think, is there any other features or something you want to highlight last?
No, I think we covered everything. Just telling you guys we're going to be more features to come over the next 12 months, especially with the integrations. But I think this is a good start in terms of everything we talked about.
Thank you, Anubhav. Thank you for taking us through. If there's any interest, I'm going to get back to you. Again, I see this is a start. Maybe we'll do more things with Kata and Tata.
Sounds good, man. Thank you so much for having me. Thank you.
Thank you, Anubhav. Have a good day. Bye.
You too.